Morning, Warriors! The banks are playing game with your hard-earned money. Do you know what the Volcker rule is? Of course you don't. Why would you know what the Volcker rule is? You're not taught this in school. You're not taught economics, and nor are you expected to understand this. So it's not your fault. But once you have the information, Warriors, information and knowledge is not power unless it's enacted upon. Now, this stuff is boring, so I'm going to say this every single video. If you make it all the way through, you are a true warrior. This is not exciting. This is not reality shows. This is not fun. It doesn't create dopamine. Economics are boring. That's why most people don't pay attention. My name is Coach JV. I am the top health and mindset coach in the world. What you believe in your heart, you think in your mind will eventually become your words and become your reality. And as you look this way at a C word in a pandemic, I'm teaching my warriors this way to learn how to fish. I always tell my warriors, don't believe a word I say. Challenge everything I say. Do your own research and learn how to fish. Now today what we're going to talk about is the Volcker rule. Have you heard of the Volcker rule? Maybe you have, but I want to share with you Volcker rule 2.0 that helps your banks use our money that should be used for capital requirements to get into risky investments as they crash the economy. So if you want to join my group of warriors, if you want to join our free global group, click the link down below in the description. You can join the free global group, or you can get 90% off our Warrior Academy. Why are we doing that? Because our goal is to help as many people, well, out of 7 billion people, as many as we can find, open up their mind and awareness to the possibilities for them as a human being. I show my exact portfolio, not a financial advisor, none of it's financial advice, but I document exactly what I'm doing in the quantum financial system. You work out with us, we get our mind, our body, soul, and our generational wealth right. All right, guys, so let's get right into it. So now, like I said, this is some boring stuff. It's not very exciting, but I'm going to bring you this information, and you are a true warrior if you make it through this. So what is the Volcker rule? Let me read the Volcker rule. So let me show you where I'm getting this from. So if you're looking right here, this is the federalreserve.gov website. This is right off of their website. So the Volcker rule generally prohibits bank entities from engaging in proprietary trading or investing, in sponsoring hedge funds or private equity funds. Okay. The regulations have been developed by 5 federal financial regulatory agencies, including the Federal Reserve, the Commodity Futures Trading Commission, the Federal Deposit Insurance Corporation, FDIC, okay, that's a key word. I'm going to show you a video in just a moment, the key entity, the Office of the Currency Control, and the Security Exchange Commission, okay? The web page includes information on the rulemaking to implement the Volcker rule, as well as related to statements and other announcements. So you can look this up yourself, the federalreserve.gov. So the Volcker rule is to protect you guys, your taxpayer money, to be used for capital requirements. So what should be happening right now is banks should be stacking up their capital requirements for the big crisis that we're going through. Banks are getting liquidity pulled back, and banks operate off liquidity. Now the EU, Europe seems to be doing the right thing. They're moving to a digital currency. China's moving to a digital currency. America is behind, or is it political theater? But what's happening, warriors, is why is our stock market at an all-time high? Think about that. With unemployment collapsing. Think about that. With unemployment collapsing, small businesses are going out of business. They're not going to survive this. How is your stock market so high? Well, I'm going to show you because they came up with Volcker Rule 2.0. I need you to listen to this video all the way through. I'll narrate it.
Former FDIC chair. Sheila, thank you for joining me today, the day where we're going to learn stress test results. But before that, OCC just approved 2 new rules. Right. And so there's a lot going on in the banking industry. The 2 new rules real quickly, they're going to be allowed to invest in more risky ventures like venture capital funds, and margin requirements within the same firm on derivatives is going to be altered so they'll be able to save money. What do you think of those 2 rule changes?
Well, I think they're significantly in the direction of deregulation. That's kind of been the glide path we've been on for several years now, which I think directionally is the wrong way. And we're paying for it now in terms of the what we could have larger capacity for banks to deal with the current pandemic. These 2 specific proposals, I think, are ill-advised, especially as a former chair of the FDIC. It won't surprise you to hear me to say that $40 billion that will no longer be in banks to protect them against derivatives exposures that their affiliates are imposing on them is no longer there. I think that imperils, increases risk to the deposit insurance fund. So no, I do think that's ill-advised. And the Volker rule, they've been listening to that for years now. It's been under constant assault. This, as I understand it, the rule change basically defers to banks to decide what's proprietary or not. We went down that road with risk-based capital because you remember we're basically letting banks decide how much capital they should have prior to the great financial crisis. So been there, done that in a different context. It's not a good idea. So I think very disappointing, but it is what it is. I'm getting used to it with the current. I respect all of them.
Okay, let's stop for just a moment. This is the former FDIC chair. Do you see what they said? They're allowing them to operate in riskier investments. That's why your stock market's at an all-time high when we have a massive crisis going on. She said they're deregulating. Where are we heading to, Warriors? A new quantum financial system. They're getting ready to crash the car. Problem, reaction, solution, crypto.
But I think they are directionally so going the wrong way on all of this.
So you think that if we were as tough on the banks the last 6 months as we were the 6 months after the credit crisis, somehow this would have turned out better? It certainly doesn't seem like banks have been antagonists in any of the conditions of the coronavirus issues relating to the economy thus far.
No, that's not what I meant at all. Yes, absolutely. Banks did not cause this crisis. We hope that they are helping to be part of the solution. But my point is, over the past 3 years, banks have been able to pay out more in capital distributions, in dividends and buybacks than they've actually earned. So their capital levels have been going down. The Fed did not invoke something called a countercyclical capital buffer, which is designed to get banks to increase their capital buffers when you get at the end of a cycle. And there are a lot of good reasons to do that. And we're seeing them now because when you get into economic turmoil, whatever the cause, banks need to expand their balance sheets. People put more money in FDIC and insured deposits. Governments the Treasury issues more debt to deal with the economic turmoil. That creates demands for reserve deposits. So you want excess capital in the system towards the end of a cycle as you're approaching potentially troubled economic times. So you can draw down without compromising financial integrity. And
so what she's saying in our terms is that basically they're supposed to be increasing and expanding their capital requirements. They're allowed to reduce their capital requirements and put it into riskier investments. That affects you, Warriors. That is your taxpayer money.
And so we were not building those capital buffers going into this. And now we're giving them a lot of additional capital relief, which we can talk about, at the same time that we're allowing banks to continue to distribute capital in the form of dividends and in discretionary executive bonuses when that capital should be retained on bank balance sheets so it can lend.
So they're getting their money, Warriors. They're getting their money, and they're going to give you a little measly $1,200 stimulus check to keep you happy. Problem, reaction, solution. But you can be part of the solution, Warriors, moving into the new quantum financial system, just like we teach our Warriors. Now let's remember what Jerome Powell said right here in this European Union Bank Forum Forum.
About the long-term impact.
I would agree that what this crisis is in the process of doing is it is accelerating a lot of pre-existing technological change. So technological change raises productivity generally, and over long periods of time, those gains tend to be broadly shared. But in the short term, that may or may not be the case. And I along with many others, will leave social media out of it, by the way, in terms of adding to productivity. Not sure I would say that for social media. But for other kinds of technology, I would say it. And in this particular situation, I would worry that the changes, we're not going back to the same economy. We're recovering, but to a different economy. And it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers who, as Andrew just mentioned, it's relatively low-paid, public-facing workers in the service sector who are bearing the brunt. This is largely minorities and women, or skewed toward minorities and women, and relatively low-paid. So
So he just told us we're not going back to new economy. They got Volker 2.0. The executives are getting their bonus checks, and the disparity between the rich and poor is becoming much larger. And as you're looking at a pandemic, you're looking over here, there's a huge global financial shift happening over here, and you're going to get left behind, Warriors. You're going to get left behind. So I want to ask you a question. Why is, let me read this to you. Stock market news live updates. S&P 500, Dow Jones, and NASDAQ reach all-time closing highs as stocks end another record-setting week. This is December 4th. How on earth is the stock market breaking records? How on earth is a stock market breaking records if you're losing your job, if mom and pop businesses are being crushed? Because they're changing the rules, Warriors. This stuff is boring. Economics is boring, and they know that. All they know is you want your reality shows, you want your stimulus checks, you want your free government money, and you want to be buying McDonald's and all this stuff. We need to clear our mind, we need to move our bodies, and we need to think like the uncommon 1%, Warriors. That is the key to this. The reason why it seems so confusing, the reason why you think cryptocurrency is a fraud, because it's a narrative you've been sold. And they keep you focused on the riots, they keep you focused on the pandemic, they keep you scared, they're going to lock you down. Problem, reaction, solution. It's time to wake up, Warriors. It's time to protect your family, your mind, your body, your immunity. If you made it all the way through, comment Warriors Rise down below, because you are a true warrior. If you want to run with our warriors, over 200 warriors worldwide, 9 different countries now. We are the uncommon 1%. We come together. We share ideas. I also show my own portfolio, as we manage, it's a new quantum financial system. You can join down below for 90% off, Warriors. It's time for us to rise. Warriors, rise. Let's go.